Hello everyone, welcome to my channel Eco Mystery. Hope everyone is fine and safe. So in the today's class we will discuss about the journal entries with the GST and the TDS impact. So in the today's class we will discuss if there is any TDS we have paid or we have taken from the customer, what is the impact, how we need to post the entry with that particular impact, and if we have taken any services and procure any goods on which we are required to deduct the TDS from the supplier payment, how we can post the entry with that impact. Okay, so first of all, it is a very essential for you to understand about what is TDS and what is GST. So they both are the tax which is mandated by the government to deduct. So GST is a tax which levy or required to collect from the customer whenever any supplier made any sale. It means if you purchase any item or if you have taken any services from a registered supplier under GST, they are liable to collect a GST from you. So whatever the GST they have collect from you, it is a GST output for them, but similarly you have paid the GST to them, so it is a GST input for you. So under the GST there are two concepts, one is GST input and GST output. So here you have to understand, whoever the person has paid the GST, it is a GST input for them, and whoever the person collect the GST from the customer, it is a GST output for them, because they are collecting the GST from the customer on the behalf of the government. It means whatever the GST they have collected from the customer, they have to deposit to the government. Okay, and also under the GST we have two type of the transaction. First of all, interstate transaction and interstate transaction. Means if you procure the goods or services from your same state, then it will be a interstate transaction and CGST and SGST will be covered. So it means suppose 18% GST will be applicable, so 9% CGST and 9% SGST will be come in this scenario. But if it is a interstate transaction, it means whenever there are two states involved in one of the transaction, it means it is a interstate transaction, it is a IGST GST, and it is you don't need to split the GST rate, it will be covered under one rate only, like IGST 18% only. Okay, so under the intrastate transaction, it means the whatever the GST they have collect, half portion will be goes to the state government and half portion will be go to the central government, but in the inter state transaction all the tax will be goes to the state government only. Okay, so that will come as a IGST. Okay, and also what is TDS? It is also a tax which is mandatory under the Income Tax Act. There are certain limits under which we are required to deduct the TDS. At this point of time, you don't need to understand which tax rate we are required to deduct and on which type of the service we are required. Whenever you need to post the entry with TDS, it is already given in the question which tax rate or which percentage of the TDS you are required to deduct. The main part is to understand that whenever there is any TDS part involved, it means whatever the TDS you are required to deduct, that will be reduce the supplier payment. Okay, so let's try to solve some questions. First is ABC Limited purchase raw material worth 1 lakh from a registered supplier. It means ABC Limited has purchased some raw material of 1 lakh from a registered supplier, and on which 18% GST will be applicable, and they will make a payment on a later stage. So if first of all we will try to post an entry without considering the GST impact. Okay, so what journal entry you will post? Purchase account debit to supplier by 1 lakh. But here you have also paid 18,000 extra, right? 1 lakh into 18%. So 18,000 you have paid extra. That also you need to pay to the supplier, and since you have paid the GST, it is a GST input for you. Okay, and here in this question we don't have any visibility, or they have not provided any data like whether this transaction will be incurred in a same state or in a different state. So it's better we can consider as a GST input only. Okay, second is goods were sold for 3 lakh. It means sale happen of 3 lakh to a registered customer. So what is the journal entry? Receivable account debit to revenue, because you have mentioned that amount is receivable. But you have also collected 12% GST. It means 36,000 you have collected from the customer. So that is a GST payable, because you have collected on the behalf of the government only from the customer. So what is the total amount that customer has to given to you? 3,36,000. Okay. And out of 3,36,000, 3 lakh is your revenue, it is your income, but 36,000 is a government income, so that you have to pay. So it is come as a GST payable, because it is your liability. Okay. Since you have collected the GST from the customer on the behalf of the government, so you have to pay back to the government also, you have to deposit to the government. So when you deposit that, so there is this option in the GST Act. Whatever the GST input you have, you can adjust with the GST output or GST payable. So considering above two questions, suppose we have to pay 36,000 to the government. Okay. And GST input we have 18,000. So 36,000 minus 18,000 we can pay to the government. Okay. Let's try the same question also. Input GST available is 60,000 and output GST liability 17,000, 75,000. It means how much we have to pay to the government? 75,000. How much benefit we have? 60,000. So rest 15,000 we will pay to the government. Okay. So GST provide an option to the businessman that they don't need to pay the entire GST liability. Whatever the GST input they have, they can utilize against GST liability, and rest they can pay into the government as a cash. Okay. Okay, let's try some tedious questions. Paid professional fees of 50,000 to a consultant. It means you have taken some professional fees from a consultant. So what do the journal enter in the normal scenario? Professional fees to consultant, vendor payable, or to bank, considering it is paid or it is not paid. But here 10% TDS is applicable. So I told you earlier also, whatever the TDS we require to deduct, it will reduce the supplier payment. It means 5,000 we have to deduct. So how much net payment we have to make to the consultant? 45,000, and rest is the TDS payable towards government. Okay. Office rent of 1,20,000 is payable to the landlord. So what will be the journal entry? Rent account debit to landlord payable 1,20,000, right? But here we have to deduct a TDS of 10%. It means 12,000 we have to pay to the government on the behalf of the landlord. So 12,000 will reduce the landlord payment here. So what will be the landlord payable? Like, what is the amount payable towards landlord? 1,08,000, and rest is 12,000 towards government as a TDS payable. Next is good transport contractor bill amounted to 80,000. It means we have taken the transportation services from a contractor of 80,000. TDS 1% is deducted and balance paid immediately. It means whatever the payment we have to make, we have paid immediately after deducting the TDS. So what is the expense? Transportation contractor expense 80,000. 1% TDS we are required to deduct. It means 800 we have to deposit to the government. Rest 79,200 we can release to the supplier. Okay. TDS balance of 25,000 deposited to the government. It means whatever the TDS liability we have, we already deposit to the government. It means it will reduce the bank balance. The bank balance should be credited, and our liability will be reduced. So TDS payable account debit 25,000. Okay. Let's try some case study. In this case study, you will find the GST and the TDS impact cumulative. Okay. So here ABC Limited, based out of the Delhi, have taken some professional services from a consultant. They are also based out of the Delhi only, and they have taken the services of 1 lakh, and on 1 lakh 18% GST is applicable, and 10% TDS they are required to deduct. First of all, on the GST, it means professional consultant has to collect 18% GST. It means 18,000 they have to collect from the ABC Limited. The question is how much TDS you will deduct and on which value. Either you will collect the TDS on 1 lakh, or either you will collect on 1 lakh 18,000. So this is a tricky point. Here you need to understand the government will never collect the tax on tax. GST is also a tax, TDS is also a tax. So you will never collect the TDS on the inclusive value of the GST. It was always applicable on pre-GST value. So we have to require to deduct the TDS at 1 lakh only. Okay. So it means 10,000 they have to deduct the TDS and deposit to the government. It means 1,18,000 inclusive GST we have to pay, and 10,000 we can deduct. So net amount 1,08,000 we can pay to the vendor, 10,000 we have to pay to the government, and 18,000 is our input, and rest 1 lakh we can book as a expense. Okay, hope everyone is able to understand the concept. Please try more and more questions, then you will get a more clarity about the concepts. Okay.